Hey everyone, welcome back to Corporate Decoder, where we try to make sense of the money games that companies play. Today we're diving into a filing that hints at some big moves and potential shakeups. So buckle up, join our Discord community in the description for more behind the scenes action. So what is the big news? It looks like Live Oak Acquisition Corp V, which we'll call LOCV for short, had a major investor call on the 14th of November 2025. The main topic was their planned business combination with a company called Teamshares Inc. Think of it like Live Oak is gearing up to merge with or buy Teamshares, making them a combined entity. Before we get into the details of the deal, let's quickly look at how Live Oak itself is structured. They've got these things called units, and each unit is a package deal. It includes one regular share of their stock, kind of like a standard ownership slice, and then also half of something called a redeemable warrant. Warrants are like options, giving the holder the right to buy stock later, in this case at a specific price. These warrants are interesting. Each full warrant, remember they only have half in the unit, lets you buy one share of Live Oak stock. The exercise price, meaning the price you'd pay to get that share using the warrant, is set at $11.5. This is important later when we think about the value of these warrants. Now, Live Oak itself is incorporated in the Cayman Islands. You might wonder why that matters. It often has to do with tax regulations and how companies are structured legally. They are listed on NASDAQ, where their units trade under the ticker LOCV, their shares under LOCV, and the warrants under LOCVW. Something else to note is that Live Oak is what is called an emerging growth company. This basically means they are a newer company and get some relaxed rules when it comes to reporting to the CSE. They've also elected not to use the extended transition period for new or updated accounting standards, meaning they are keeping up with the latest accounting rules right away. The core of this filing is about that investor call. Live Oak held it to discuss their proposed business combination with Teamshares. The actual transcript of this call is included as an exhibit, which means it is part of the official filing. Usually, when companies have these calls, they are trying to get investors excited about the deal and explain why it is a good idea. So what happens next with this business combination? Both Live Oak and Teamshares are planning to submit a registration statement to the SEC. This document is crucial. It essentially explains the deal in super detail and includes a proxy statement for Live Oak shareholders. This proxy statement is what shareholders will use to vote on whether to approve the merger. It'll also serve as a prospectus, telling investors about the new securities, like stocks and warrants, that will be issued as part of the combined company. The SEC is going to review all of this, and once it is approved and declared effective, Live Oak will mail out these documents to its shareholders. These will be packed with critical information about the deal, and the company is strongly urging everyone to read them carefully before they vote. They stress that these documents will contain important information, and you should not make any voting decisions without reviewing them. Now, when a company asks for votes, there are specific rules about who can talk about it and how. The sexy rules say that Live Oak Teamshares and their top people like directors and executives can be seen as participants in asking for those shareholder votes. This means their communications about the deal have to follow certain disclosure rules. The filing assures that more details about these individuals and their roles will be provided in the upcoming proxy statement. It is also super important to understand what this report is not. This particular filing, the Form 8K, is not designed to get you to vote or to buy any securities. It is more of an announcement and a disclosure of important events. They are explicitly stating that this is not an offer to sell or buy any stock, and it is not asking for your vote or approval. Any actual sale of securities will only happen after the proper registration and legal processes are completed. And then we get to the forward-looking statement section. This is standard in filings like this. Basically, companies use this language to say that they are making predictions about the future, but they are not guaranteeing those predictions will come true. They include words like believe, expect, anticipate, estimate, and plan. It is a legal way for them to say that while they have hopes and plans for the future, actual results could be very different due to many risks and uncertainties. This section is packed with potential roadblocks for the deal. One major risk they highlight is the possibility that the combined company might not be able to get its shares listed, or keep them listed, on a major exchange like NASDAQ after the merger. Imagine going through all the trouble of merging only to have your stock delisted. That would be a huge problem for investors. Another significant factor is shareholder redemptions. Live Oak is a special purpose acquisition company, or SPAC. When SPACs announce a merger, public shareholders often have the option to redeem their shares for cash rather than participate in the new company. If a lot of shareholders choose to redeem, it means less cash for the combined company. which can impact its operations and future plans. The higher the redemptions, the less capital the combined company will have to work with. Finally, we look at the exhibits. This filing has Exhibit 99.1, which is the actual transcript from that investor call. This is likely where people will find the most juicy details about Teamshares and why Live Oak wants to combine with them. They also list an Exhibit 104, which is the cover page interactive data file, as standard component for electronic filings. Looking at this filing, it is clear that Live Oak Acquisition Corp V is in the very early stages of a significant transaction. The primary goal of this report is to inform the public about the investor day where the proposed merger with Teamshares was discussed. The company is laying the groundwork and providing the necessary disclosures as required by the SEC. The signature at the end indicates that Richard Hendricks, the Chief Executive Officer of Live Oak, has reviewed and approved this report. This is standard practice to show that the company's leadership is aware of and stands behind the information being filed. It signifies a formal commitment to the disclosures made. So, what is the big picture here? Live Oak is making a move, and the investor call was all about drumming up support for a merger with Teamshares. The key takeaway is that this deal is still in progress, and shareholders will have a big say through their votes. A major risk is shareholder redemption, which could seriously impact the combined company's finances. We're waiting to see the full registration statement and proxy materials to really understand the nitty-gritty of the Teamshares business and the terms of the deal. Without seeing that transcript, it is hard to say if this is a slam dunk merger or something that might face more hurdles. Right now, it is all about information and shareholder approval. That is our breakdown of Live Oak Acquisition Corp V's latest filing. What is your take on these SPAC deals and the potential merger with Teamshares? Do you think shareholders will redeem their shares or vote yes? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives into corporate finances. Don't forget to check out the Discord in the description for more exclusive content. Thanks for watching. See you next time.